Ladies and gentlemen, it is on like Donkey Kong in this mother effer. Donald Trump wrote on Truth Social, "Congratulations to everyone. It has been fully agreed by and between Israel and Iran that there will be a complete and total ceasefire in approximately 6 hours from now, when Israel and Iran have wound down and completed their in-progress final missions for 12 hours, at which point the war will be considered ended. Officially, Iran will start the ceasefire, and upon the 12th hour, Israel will start the ceasefire, and upon the 24th hour, an official end to the 12-day war will be saluted by the world. During each ceasefire, the other side will remain peaceful and respectful. On the assumption that everything works as it should, which it will, I would like to congratulate both countries, Israel and Iran, on having the stamina, courage, and intelligence to end what should be called the 12-day war. This is a war that could have gone on for years and destroyed the entire Middle East, but it didn't and never will. God bless Israel." Give him a lot of props for saying this one. God bless Iran, God bless the Middle East, God bless the United States of America, and God bless the world. President J. Trump, Donald J. Trump, President of the United States of America. So yeah, this conflict is coming to what looks to be an end. The S&P is up 0.5% in after hours at the time of recording this video. Tesla is up 1.36%. Look at that energy. USO is down to $73.63 on USO. We actually traded some $75 USO puts. If you are in the trading group and held on to those positions, congratulations, because you are now in the money almost $200 per contract. I sold out at 100%, but yeah, I'll show that in just a moment. Now, ladies and gentlemen, here in this video, we will discuss what is coming next for markets, what is next for Tesla stock, the rally that I think is ultimately coming that will send stocks to new all-time highs, that will send Tesla into the 400s. But we do have some catalysts to come. Okay, we do have Fed Jerome Powell tomorrow. Fed Bowman was the latest Fed official today to say that, hey, we should probably cut rates in July. That follows Fed Waller's recent comments in the past couple of days as well. There is a division that is happening between Fed governors. And just look at this technical setup for Tesla. Boy, does it look beautiful. I could even draw a little trend line there, suggestive of what could be a rally into the low 400s, again, coming soon. We'll talk about that here throughout this video. But we do have a speech, again, from Fed Jerome Powell tomorrow morning. We'll see what side he's on. If Powell gets a little bit more dovish tomorrow, if he stays on the whole let's wait and see approach, or kind of what happens with that. Because this last Fed meeting, the Fed got more criticism than I've ever seen at another Fed meeting, literally ever, okay? I think the Fed got more criticism from this last Fed meeting than when they cut rates 50 basis points on September 18th, right before the election. Why? Because the Fed effectively switched from a data-dependent approach to an opinions-based approach. And that, historically, has never been good for the Fed. And I think that's why now you have Fed Bowman, Fed Waller, that have publicly come out and say, hey, we should be cutting rates in July because that's what the data says we should be doing. But hey, if Powell does get dovish tomorrow, then that is obviously going to be, as Trump said previously, jet fuel or rocket fuel on this market. We'll also share with you a clip in this video of what Tom Lee said about this Israel-Iran conflict earlier today and what is likely going to happen for markets following the resolution of this conflict, which is great timing for Mr. Tom Lee and for the purposes of this video. But we'll share that later on. Ladies and gentlemen, hit that like button and subscribe to the channel if you have not done so already. Like I previously mentioned, we traded oil earlier today in the trading community. We actually traded energy, USO specifically, in the trading community. If you guys want to come join this, check it out, link down below in the description of this video. Of course, you know, I get in early and I sell out a little too early. That's typically what I do. We only bought 5 contracts for $64 a piece, sold all 5 contracts at $119 a piece, so almost a 100% return. But these contracts ended up going up a lot more than that. In fact, these options closed the day at $172 a piece, including the move in after hours. I'm sure they're going to be worth even more than that by tomorrow morning. Now, if you guys want to come join that, check that link out down below in the description of this video. A big strategy we've been doing recently is looking through the small caps, the micro cap stocks, to try to find some of the next big winners in AI, in biopharma specifically. I think that's where a lot of the opportunity is as of now. Those companies are just underlooked. Nobody cares about them, but there is some real opportunities out there. Of course, like 95% of them are pure garbage and you shouldn't touch them with a 10-foot pole. But, 3 to 5% of them could be huge winners. And we're sifting through to filter those out and making investments in the ones that I think will be winners. We've had very good success rates on doing this in the past, and some of the opportunities we're being presented right now that I am sharing due diligence on are just like shocking that these stocks are trading where they are. Now, Donald Trump wrote on Truth Social, he says, quote, "Iran has officially responded to our obliteration of their nuclear facilities with a very weak response, which we expected and have very effectively countered. There have been 14 missiles fired, 13 were knocked down, and one was, quote, set free because it was headed in a non-threatening direction. I am pleased to report that no Americans were harmed and hardly any damage was done. Most importantly, they've gotten it all out of their, quote unquote, system, and there will hopefully be no further hate. I want to thank Iran for giving us early notice, which made it possible for no lives to be lost and nobody to be injured. Perhaps Iran can now proceed to peace and harmony in the region, and I will enthusiastically encourage Israel to do the same. Thank you for your attention to this matter. Donald J. Trump, President of the United States of America." So again, that's what caused the big rally into the end of the day today for markets, because it's seen as this conflict is effectively over in terms of the worst of it is behind us. Now, as well as that, a couple hours ago, Elon Musk shared this clip from CNBC talking about the Tesla robo-taxi and thus kind of reiterating his comments that he made. Then you can kind of take this as some degree of guidance on the robo-taxi, even though it's not something that is official. Take a listen to this. It's only about a minute and a half long, so it won't take too much of your time. But I think it's important because Elon, well, is basically confirming this yet again.
I'll come to Waymo because even though they only have about 700 cars, they obviously are on the market. They're in Beverly Hills, all over the place.
It's a proof of concept.
They've got 28 cameras. They've got LiDAR and radar. You've had a different approach. Eight to nine cameras and the neural network. Why do you feel that is going to be the equivalent in terms of safety profile?
Oh, I think it'll be better.
Why?
Because the way that the road system is designed is for AI. It's for intelligence, biological neural net, and eyes. That's how the whole road system is designed. So what will actually work best for the road system is artificial intelligence, digital neural nets, and cameras. And we also have the microphones so the car can hear emergency vehicles and that kind of thing.
Right. You are going to have the microphones to hear the
yeah, you need to hear.
That was a question. Right. You need to hear a fire engine or a police car.
Yes, exactly.
Right.
But that's how the whole road system is designed. It's not designed for shooting lasers out of your eyes. And what we found is that when you have multiple sensors, and they tend to get confused. So do you believe the camera or do you believe the LiDAR? Mm-hmm. And if you get confused, that's where that's what can lead to accidents. So we used to have, for example, radar in the car, but we found that the radar and the camera would sometimes disagree, and then you don't know which one to believe.
So it wasn't about expense; it was just about
no.
Yeah. Are you seeing the data right?
In fact, we turned off the radars in the cars.
You turned off the radar. Yeah. So I mean, are you comfortable right now? If I were to say to you, all right, let's go. Do you think that you're there in terms of the safety profile you're seeing right now?
Yeah, we could take a ride today if you want. Sure.
Yeah. Well, I'm happy to take a ride with you anytime you want, wherever you want.
Now, Elon Musk also shared this clip or reposted this clip. This clip from Ron Barron on CNBC a little while back. It says, FYI, Ron Barron thinks Tesla owned and operated robotaxis will generate $50,000 of revenue miles a year per car. This clip's only about 40 seconds. Take a listen.
But anyway, the fundamentals are changing. Instead of making $5,000 or $6,000 or $7,000 a car, you're going to robo cars, and every time they have 1 million cars that they make, that they keep, that are $30,000 a piece that last 1 million miles, those cars are going to generate 50,000 revenue miles a year. So before the model was they're making $7,000 in profit a car, $6,000 in profit a car, 1 million in cars. Now all of a sudden you're keeping the cars and making them robo taxis. What it means is that if you do 50,000 miles a year for a car, those cars will generate 50,000 revenue miles. They'll generate 30 or 40 or $50,000 in profit per year, per car. So every time you have 1 million cars, you're adding 30 or 40 or $50 billion to $50 billion to profits per year.
So yeah, in other words, Elon is kind of reiterating the incredible profit that robotaxi could drive for Tesla over the coming years. Now, I do want to share with you guys a clip from Tom Lee today on CNBC. This clip was right before the whole Iran retaliation, but that's what's great about it, because Tom Lee says after Iran retaliates and after the situation is, dust is settling, stocks are going to go for a run. Stocks are going to rally. So I actually think the timing of that clip was great, and I think you should definitely hear it. But tomorrow, we have Fed Jerome Powell that's going to testify in front of the Senate. I believe it's in front of the Senate. We have the, Fed Williams will speak. Fed Hammock will speak. And I believe Fed Collins, Fed Barr, and Fed Kashgari later in the day. Fed Schmidt, even at like 8 o'clock at night. We want to see how deep the division is at the Fed. Like, is it just Bowman and Waller, more of the Republican-leaning Fed governors that want rate cuts? Or is it more split? Okay, the odds of rate cuts since Waller and Bowman started talking about a July 30th cut. That is the next Fed meeting. That's over 5 weeks away from today. The odds were at like 97% chance of no cut. Now they're only at 76.5%. The odds of a cut July 30th is now up to 23.5%. So the odds of a cut has went up from like 3% to 23.5%. If you start to get more Fed officials, and let's say maybe even Powell tomorrow, that suggest a cut may be appropriate by the July Fed meeting, I think that's going to help to boost markets quite a bit as well. We know in 2026, when Powell gets resigned and gets replaced, you're going to get a lot more cuts next year because, we're not going to have inflation. Like, we pretty much all know this already. We're just kind of waiting, like, hey, when is the Fed gonna, come to their senses? But the sooner we get cuts, logically, should be better for markets and better for, especially what I believe, risk on assets like Tesla should do very well with more interest rates cuts. Okay. We don't have the inflation problem. The Fed should be cutting right now. I also think AI is going to become front and center as we get more rate cuts from the Fed, because AI is such a hyper growth area right now in markets that some areas like have done well. Some of the like GPU providers, some of the enablers of AI have done well. I think it's really time for the appliers of AI. It is the AI software companies. It is some of the, cybersecurity AI related names. It is a stock like Tesla and some of the other ones that we invest in as well that are about to have their turn. And, I think that's what's going to help drive markets to new all-time highs and drive Tesla into the 400s relatively soon. But I think rate cuts is like, as Trump said recently, jet fuel on this market. So if Powell does take a dovish kind of approach tomorrow, suggesting that a July cut could be possible, I would imagine that would be positive for stocks. And again, now that this Middle East conflict is pretty much behind us, it doesn't look like it's going to get worse from a U.S. involvement perspective or from Iran, attacking the U.S. That's not going to happen again. Maybe there is room for some diplomacy here, and potentially, getting this conflict out the way, we can start to look forward to more important things again. Like, who even cares about the tax bill now? Like, that seems like a distant memory. Okay. Like some of the things a trade war. Pfft, what's a trade war, right? We're going to start focusing on maybe getting deals done. Maybe the positive aspects of the trade deal. Maybe company earnings are going to start being more important. We know we have FedEx and Nike this week. Those are very important companies for the broader markets. If we start to hear good things from, a new round of earnings coming soon, that's what we're going to care about now in markets. Now, take a listen to what Tom Lee said today about the stock market and about clearing the hurdle with this Iran conflict. Specifically, I want you guys to pay attention to Tom Lee's expectations for markets, again, after we get done with the Iran conflict, which is effectively now.
Some session highs, every sector currently green except energy, led by consumer discretionary this morning. Joining us here at Post 9 is Tom Lee, Fundstrat Global Advisors, Head of Research, and Fundstrat Capital Chief Investment Officer, also a CNBC contributor. Tom, it's good to have you. Welcome. Talk about confounding expectations, wouldn't you say? What do you make of this morning's action?
Well, in some ways it's not a surprise because, as you know, like Art Cashin had the adage, sell the buildup, buy the invasion. And I think today is an example of that markets were kind of already nervous and anxious, and we've already saw de-risking, and the VIX was already elevated. So I think in some ways this is probably pretty typical.
Does it change your call for the rest of the year at all? And you think it displaces any other priorities or has any effect on bill passage or how that might get constructed?
In some ways, it actually strengthens the case for stocks to do better into year-end, because at the start of this year, we would have said U.S. bombing a nuclear facility is a black swan. Oil would be 120, stocks should be down 10%. And then we have the event, and oil is not really surging, and stocks are up. So I'd almost say that you've put another stress test into the market. We've seen it pass it, and I think it means stocks should do pretty well into year-end.
You think Hormuz remains a risk?
I do, but Brian Sullivan was off camera was mentioning a lot of strategic reasons why that may not be the case. I'm sure he's going to have his views, but I would say I'm watching oil, and if oil isn't surging, then I think it just means that the risk of the straits being closed is lower.
I guess when you think about the impact for U.S. stocks and bonds and the dollar, it comes down to growth and inflation expectations. And the key, Tom, is whether either of those things have changed in light of recent geopolitical events.
Yeah, and as you know, core CPI doesn't include energy. And as you know, when the ECB looks at core inflation, they exclude housing. Housing is not part of ECB's core CPI, and they're cutting. If you calculated U.S. CPI on the same exact basis, it's lower than Europe. So I do think there should be a dovish tilt towards the Fed, or that's the upside opportunity into year-end as well.
Tom, there seems to be a speculative nature to the market that's creeping in again. I wonder if it's a concern. And when I say that, I'm talking about the reception of some of the IPOs. I mean, granted, very well received, but Circle's now got a $62 billion market value. CoreWeave, almost $90 billion. You got a lot of SPACs coming back. I don't know if you've seen it. Yeah. Even Chamath is coming back with some SPACs. Any concern to you or no?
It is. I mean, those are echoes of 2021, which is some stocks get fantastically bizarre valuations, and I'm not naming any. And
you want to name some?
And then there is signs of speculation. And but the one thing that was true in 2021 that's not true now is when I meet with fund managers, in 2021 they said there was no stock they could buy because everything was expensive. That's actually not true anymore. Now the people I talk to are saying, look, the numbers have been better and numbers are going up, but the macro is making them uncertain. So there's actually a lot less risk taking by institutional investors.
So to the extent a speculative part of the market is something you monitor, it's not hitting a level that is that concerning to you.
Yeah, I mean, to me, David, it's the sign that the cohort that is speculating are the ones that bought the dip in April. As you know, it was retail, the Robinhood community, that was buying in April when institutions were selling and raising cash, and high net worth was raising cash. So it's the same crew now that is buying, the Circles at one times assets under management, which is tremendous, but it's not speculation to me yet, because I'd say high net worth is not really that invested, and institutions are still pretty cautious.
But what is the underlying view that you have that makes you bullish? Is it that the economy's hanging in? Is it that earnings are picking up? What's the fundamental reason?
I think when we look at macro, on the margin, things are better. We have better visibility on tariffs into 2026. We have regulation and tax, like legislation visibility into 2026. I think the Fed is now being questioned about their unwillingness to cut. I mean, it was apparent like 5 out of the 10 questions during the press conference were about that exact question. So there's a dovish Fed. I know consumers are overly cautious right now, but as you know, inflation expectations are far above CPI. That's a positive surprise if delivered inflation's lower. And then businesses have been really resilient. You know, I mean, I think actually the economy might be weakening, but earnings have been better. So overall, with all the cash on the sidelines, I mean, I would say we should be quite bullish, actually.
Tom, we'll talk again soon.
So like I said previously in this video, I do think this sets us up for a move to new all-time highs, a run in markets, and a bit of a squeeze. I think there's been a lot of people that have been bearish on Tesla, that have been bearish on markets, and that bearishness needs to start coming to an end. Now, let me tell you something. When's the last time the markets cared about a trade war headline? Or we even got a trade war headline? When is the last time the markets cared about the tax bill? Okay, we haven't heard much about that. Wall Street seemingly doesn't care about it because the big situation was the war in the Middle East. Now that that is over with, do you think we're going to go back to stressing about a trade war? Do you think we're going to go back to stressing about the tax bill? No, these things have gone and passed. It is clearance to make new all-time highs for Tesla stock, as I said at the onset of this video, to rise well into the $400 levels. Ladies and gentlemen, it is only a matter of time. Let me know what you guys think about this down below in the comment section. Hit that like button and subscribe to the channel. Come join us in the trading community. If you want to be part of the most unique community in the world that is going out and finding massive value in small cap stocks that Wall Street is overlooking. These are companies that are 10, 20, 30, 40, 50, 100x opportunities. These are not necessarily day trades. These are more swing trades or longer term investments. So just so you guys know, there's a lot of criteria those companies have to meet. And 98%, 97% of them do not meet that criteria. And that is the research we do every day, hours and hours every single day. So you don't have to. So you can be a part of this kind of opportunity without having to dedicate hours and hours a day doing it yourself. That is the real value provided in the trading group. Let me know what you guys think again about our markets here following this news. Have a great rest of your day, and I will see you in the next one.